Good afternoon. What's going on, guys? What's going on, Renee? Good afternoon. The week is what? We're about halfway through the week. Today's Wednesday. We got one more day before we kind of close out the week here. I gotta say, today was kind of a little bit of a shit show. I mean, there's no easy way of putting that. Obviously, there's always days where you can make money, but then there are days where you can actually make more money in terms of the kind of price range that you trade in. Today was not the ideal range in which we traded in. That you ideally were saying, you know what, I made 100% that much easier than it typically is. That's pretty much the bigger thing. And those of you that were in the dojo chat, I know that Avery pretty much laid it out there in terms of more so weighing for the risk to the upside. And not necessarily the risk to the upside, but more so looking for the your reward to the downside is what a better term, right? He was actually favoring the fact that we should have broken down and particularly seen us move down towards 390 and below 390. Our risk was trading down towards about 388. But I pretty much particularly have said that usually when the market is waiting on data, right? As we're waiting on data for that PPI data, as we're moving closer into that PPI data that's expected on Friday, and we have already gotten such large degree type of moves these past 2 days, what is likely going to be the circumstances leading into that PPI data? Well, the fact is that now you're getting more into indecisive territory, right? As the market wants to know the direction of move on the back end of that PPI data, now you're going to start to pretty much get the fact of where the market's going to move more within a tighter range. And to my opinion, that's exactly what we saw, particularly today. After maybe what we want to call it a 3, 4 day bleed out that we've had, the market has now started to find a little bit more of a closing range as we wait for that PPI data to see the reflexive move or more so the direction of move to state it in a better fashion. All right. But why did I actually pull up the SPY weekly chart? That's pretty much what I actually have on the screen. And that's pretty much the bigger question. And usually when you're in doubt, they usually say to zoom out. And that's exactly why I pulled out the weekly chart on SPY. And that's exactly what gave me the circumstances of understanding what I was more so dealing with today as I was going into pretty much the opening bell. And those of you that saw my comments in the dojo chat, I the one thing I kind of tried to emphasize was preserving capital today. That was my biggest emphasis. I think I commented about that about 3 times in the dojo chat. And that comes within the fact of we've already had such large degree moves here the past 2, 3 days. Now we're starting to get into that PPI data. You're going to get into tighter ranges. And that's exactly as the market basically closed down. What? 17%? Right? We started to teeter right around that 393 spot on SPY for most of the morning, more so, until we got that little bit of a micro pop over 395. And what did we immediately do once we popped over 395? We saw us regress right back down towards the bottom end of our range as we then start to tip down towards 392. So all in all, looking at the SPY weekly chart, what you can basically see is here is that we have traded what has been roughly 4 weeks, the last 4 weekly candles here, as you see, and we are trading within a tight range between the weekly 20 EMA and the weekly 50 EMA. And that's the range in which I'm looking at right now to pick a directional move on the back end of PPI data. Not necessarily the front end going into tomorrow, more so to pick a direction. So what is particularly going to be the range that I'm looking at? Well, the range that I'm looking at in terms of the highest that we could potentially look to trade at would be as high as 406 if we potentially rally ahead of PPI data tomorrow. And the bottom end of my range is going to be testing down towards this 390, in which we could potentially look to extend it down towards 389 more so ahead of the PPI data. All right. So that's the range. If I were to really more so kind of close it down for you in terms of that range, I don't believe we trade above 403, and I don't particularly think that we trade below 388. So that's the top end and the bottom end of my specific range. Is that 403, and bottom end is that 389. All right. So ultimately, what's my game plan going into tomorrow now? As we kind of see post market here and we lead into tomorrow, my game plan is to particularly look to see, all right, if the market's going to regress yet again tomorrow for what is it going to be the fourth, fifth day tomorrow, ahead of that data, I am more so going to be looking to pretty much buy the dip for a potential relief, short term relief. And when I say short term, it may only be Friday that we have a particular kind of relief day on the back end of PPI data, but I anticipate that we're going to have one more relief. We're going to attempt to get one more. look at a potential breakout, which all in all will potentially even be a false breakout, as we have already seen that we pushed 410 and we regressed pretty aggressively. I'm going to look to see if we can get that breakout above 403, and that'll be the upside in which we could potentially trade at towards going on to Friday on the back end of that PPI data. All right. So all in all, more so, if I were to give you exactly what I'm game planning for, is that we trade down to three between 389 and 390 tomorrow. I'm gonna look for particularly by the dip, and as high as we should be able to trade on the back end of the CPI data, not CPI, PPI data on Friday would be that 403 spot. All right. So that's more so my game plan in terms of going into tomorrow. So I do favor that we're going to have a little bit more of a regression, probably end up recovering rather maybe quickly, more so, whether it be early morning or late morning. I believe that we should likely see that 389 spot by maybe market open within the hour market open, and then we start to recover rather slowly going into the rest of the day, and then we'll see our pretty much our decisive movement off of PPI data, in which if we break down below 389, it's going to break this overall trend. We may not even get back above 400 on SPY. Otherwise, we get the nice little pump up PPI data, which you'll likely know before the opening bell on Friday, and we get to push up towards 403. So it all depends more so tomorrow's price action as well. Let's see how we go. I'll kind of give a little bit of an update tomorrow as well as we see price action playing out. But it was more so given the telling story today that we're going to kind of stay a little bit tight and close enough towards our support of that 20-day EMA. And that's why, even though I think some people were more so looking for a bleed out, more of a bleed out than we've already had these past 3, 4 days, I was more so kind of keyed in on the fact that if we were to break down below 390, then I was going to go ahead and play down towards 389 and maybe wick towards 388 to the downside. But 38, if as long as 390 held, and in which case that 20 EMA held on the weekly, then that just gave us that cushion to basically stay afloat and kind of trade within a range, trade sideways, more so for most of the day. And to my opinion, that's exactly what ended up playing out. And that's why I said preserve the capital until we get a bigger, larger degree directional move. So ideally, I wouldn't even recommend necessarily trying to go off of my trade plan in terms of trying to buy the dip tomorrow. If I were to really say, if you wanted to play it more safe, wait for the PPI data on Friday and then make your move off of the back end of PPI data, right? And then we'll have a better, clearer picture how to go about approaching this going into next week, and then trading towards the Feds that are going to be coming in and speaking next week. All right. So that's pretty much giving you a little bit of an idea there. But that 20 EMA, 50 EMA on the weekly, that's more so what has given me more so my kind of my game plan in terms of today's price action, and knowing that we will potentially end up trading within a range. The other thing in terms of giving you a little bit of a perspective about how I kind of determine more so as well what the day ahead was pretty much lying. Yesterday I came in yesterday and I talked about Apple, right? Post market. We saw the damage that Apple did yesterday. But what had happened pretty much the prior days before we had the meltdown at Apple yesterday? We had actually seen Apple show relative strength more so compared to a name like Tesla, right? Apple was showing that relative strength up until yesterday. What did we get this morning before the opening bell? We had already seen Apple already pushing down to a low of roughly around 141 pre-market, and that was a continuation of now what is being shown as a relative weakness between yesterday and today. It's going to be key tomorrow. Do we see that relative weakness yet again out of Apple, in which we're getting a little bit of a rotation, right? Because today, what do we see? What's actually held up out of our big three names? Out of Apple, Tesla, Microsoft, what actually held up today? More so, in a flip case scenario, Apple held up before. Now we're seeing Microsoft hold up as it's only down roughly about 75 cents, right? So that's something that I'm looking at, and I usually talk about rotation within a sector. That's what we're seeing right now. We're seeing the rotation within the sector, in which what was relative strength for one name within the tech sector is now actually relative weakness, with Apple being that case. All right. So as I kind of point into things that I'm actually looking at, one name that I'm actually kind of keyed in on that actually has more so acted as a relative weakness these past few days more so has been Tesla. What I'm actually looking at with Tesla here is to see if we can at least defend this 172 mark, in which is going to be a little bit halfway towards this gap fill. We have actually looked more so to defending that gap fill more so today. I think that they actually did an amazing job holding up and defending that gap fill, as a lot of eyes were particularly looking to fill that gap fill to the downside. It would not shock me by tomorrow morning that we probably see this open up around 172. Everyone's going to look for the completion of gap fill towards 170, and they just rip this north, in which we can start to see potentially Tesla actually shift its direction towards what was relative weakness into relative strength starting tomorrow. And that could be a name that we see particularly end up ripping tomorrow. So I do actually have Tesla pretty high on my watch list going into tomorrow, because I do think that we're going to see another rotation going into tomorrow, right? What Apple being that relative strength to weakness now, Microsoft actually holding up today. I want to see if we see a rotation into Tesla, in which that's going to be relative strength. We defend halfway through that gap fill at that 172 mark, and we start to see Tesla stage pretty much a nice little reversal, in which case, as we're going to end up potentially looking to see a recovery, not necessarily a recovery, but a little bit of a relief rally, whether it be a single day, 2 days of a relief rally from the broader market. I would anticipate we're going to see a nice reversal here from Tesla. And as far as upside goes, I'm looking for this to trade back towards 186 more so. Just depends how long it takes to particularly get there, and how long this little bit of a relief rally is going to end up lasting, that I believe may end up beginning on Friday on the back end of PPI data. All right. So that's another thing that I'm looking at in terms of game plan. But for immediate purposes going into tomorrow more so, I would look to see if we end up getting a little bit of relative strength shifted into Tesla, some buying opportunity being present. Maybe buyers kind of stepped in here, defending this gap fill as we maybe even open up around that 172, and we start to see this rip north right out of the gates tomorrow. Would not be shocking to me. So that's something to definitely keep on the watch list tomorrow. Something else to keep an eye on, of course, Apple more so. Just been on the landslide. I don't expect too much out of Apple, to be honest with you. In terms of resistance, it would not be surprising if we see a little bit of a, not necessarily a dead cat that I want to say, but we could see a little bit of a bounce out of Apple here. In terms of upside range, I'm looking at 142 half, in which we can see this trade up roughly about $2 and some cents to the upside. If we see a little bit of a bounce in the market between tomorrow and Friday, I would look for this to trade back up to 142 half, and that would be my overall resistance for this to potentially see more further downside. Otherwise, we break north over 142 half, then we'll see this trade up towards 144 for a little bit of a continuation beyond that resistance. All right. So that's another name that I'll keep an eye on going into tomorrow and Friday. Let's see what else we have. I do have a channel on Microsoft. Let's see exactly how this channel is pretty much kind of dated out here. So I actually have this channel on Microsoft that was charted out on the weekly for this one. And what you basically see is a little bit of a median, a little bit of a dotted blue line on the median here of this descending channel. What it has actually represented is whether we've gotten continuation, a fake out, and as of right now, these past 2 weeks more so, we've rejected the median of this descending channel, and we've gotten the regression. So I would watch for support tomorrow in terms of Microsoft. We can see this trade down towards about 238 tomorrow. 238 would be my support, even though it showed that relative strength today. 238 would be the floor if this was to hold down tomorrow. But otherwise, you're looking for the upside. You want to see this break back above 249.72. And if we see the market trend to stay pretty much straight sideways to the upside, then we could potentially see this trade back up towards 249.72. And that would overall be a resistance, and also testing the median of this little descending channel action yet again, in which I would expect a rejection at that 249 spot, and then further downside within the coming days. All right. So that's something else I'll keep an eye on. Let's see what else. The other thing that also to keep an eye on going into tomorrow is also XLE. Those of you that have actually heard the past few days, I think I've been pretty much expressing my bear case for XLE. We had this beautiful pennant that was playing out going in towards the end of last week, and I was expressing the fact that I was expecting this to break down. And in fact, that's exactly what happened as we kicked off this week so far. A nice little breakdown that we had since that 90 $91 mark. We're now trading down towards 85. I'm going to look to see if we hold this 84 mark tomorrow and we get a little bit more of a further bounce than we had from today's price action and retest that 100-day EMA up towards that 87 mark. So that'll be something I keep an eye on as well as in terms of the resistance at that 87 mark and retesting the 4-hour 100-day EMA and look to see if that's going to be some overhead resistance in which we get continuation right back to the downside to trade below that 84. And then ultimately, downside risk that I think we are flirting with here is down towards that 82 mark for your next pretty much low off of this breakdown of the switch. All right. So XLE is definitely going to be a telling story. And that was another thing. If I actually kind of give you a little bit of a backtrack in terms of what I was looking at this morning, and I also highlighted in the dojo chat, I actually mentioned that the relative strength earlier on was looking at the Dow, in which the Dow was actually green, and also looking at the XLE, at which point in the morning it was actually green as well, as SPY was actually pressing into just around roughly what that 393 low that we had and we were looking for to break down below 392. But that was another sign in which the market was going to hold afloat. We weren't going to see a bleed out like we saw the past 2 3 days. With the Dow holding up, with XLE holding up, I was in the camp that we were going to kind of find a little bit of a base and trade sideways, in which that's why I also mentioned about data chop. And that's actually something that's actually common on Wednesdays. A little bit of a hint, not always particularly, but something that's common on Wednesdays is that you get a lot of theta chop. It's not something that always happens. But when I say theta chop, it's usually on Wednesdays after maybe an explosive or big directional move Monday or Tuesday. You get a lot of sideways action on a Wednesday. That is something that's common. Just to give you a little bit of a heads up, those of you that are not aware. But that, just to give you hindsight, looking at the XLE, looking at the Dow showing some relative strength earlier on this morning, that also gave me that leading indication that we're going to see a little bit of a flat price action in terms of the range that we traded for most of the day. All right. But outside of that, as I kind of went on a little bit of a rant there, kind of give you a little bit of an insight in terms of your three-headed monsters in terms of tech going into tomorrow, Microsoft, Apple, and Tesla. Look to see where the relative strength is going to shift pre-market tomorrow, more so into the opening bell. My assumption is that we're going to see strength kind of shift into Tesla to see a reflexive bounce as it's been bleeding out the past few days, more so than just a 3 to 4 days. I anticipate that we'll see a nice little reflexive bounce, and that should be a viable trade to the upside tomorrow for Tesla. And then, of course, look to see if Apple and Microsoft are holding afloat or if they actually particularly bleed out tomorrow. And that'll give you a little bit of a more leading indication as to whether we have another tight range that we're going to trade like today, or do we end up seeing the market either shift to the upside? We see a little bit of a rally ahead of PPI data, or do we see another bleed out ahead of PPI data, in which all of cases I still expect a nice bounce to the upside on the back end of PPI data. All right. So that's kind of just to sum you up a little bit of what I'm looking at. The other thing that I was kind of paying attention to today was also the semis. I kind of highlighted as well. I do believe that the semis are going to wake up. It's just going to be a matter of whether it's going to be tomorrow or on Friday as well. But the fact that they were able to hold up for most part of the day, at one point of the day, they actually were more so relatively green on the day. I believe that was at the point of where SPY was trading towards above 395. That's going to be something I keep an eye on between today and tomorrow and Friday as to when the semis are going to get a little bit of a reflexive bounce as I'm speaking about with Tesla getting a bounce. All right. But other than that, that kind of sums up what I wanted to highlight today. I think that's more so all I want to mention. Just know the fact that as we get closer enough to the PPI data going into tomorrow, as we expect the data on Friday, try to be more conservative in terms of taking your profits rather quickly than holding out for rather larger gains. That's going to be my biggest echo to you this afternoon. I think today was exactly one of those kind of examples in which if you did not likely secure your profits at maybe that 20-30% mark, you likely saw your profits just kind of get wiped away as we seesaw from up to down. All right. So that's something that I'm going to express going into tomorrow is make sure that you look for those quick profits. look for the quick buck until we basically get a larger directional move in the broader market. All right, because right now we're a little bit in that indecisive type of price action, as we already had a big, large degree move earlier on in this week so far. We're gonna need to see how that PPI data comes across, and then we'll get the next directional move, and then yet again we'll rinse repeat as we'll get closer to the Feds going into next week. I pretty much would assume that the range is going to get tight come what is that, Tuesday or so. Our range will likely get tight as we get close enough to the Feds next week, and we wait to hear what their statements are going to be. All right. But I will wrap up today's segment with that. Appreciate you guys joining as always. I will see you guys tomorrow. But